The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Now, stock of the day, well, the focus is, of course, we're on a US special, so we're going straight there. It is CoreWeave. It has just debuted on the NASDAQ. What a time to IPO. It's AI cloud provider, debuting on Friday, closing around $40 a share. It raised about $1.5 billion, short from the 2.5 initial goal. The firm's backed by Nvidia. Stands at a valuation of $23 billion US on a fully diluted basis. Some investors expressing concerns about its reliance on Microsoft as long-term demand for chips remain uncertainty. Also potentially showing there that IPO market is remaining lackluster essentially after what we saw a couple of years ago. So, and then of course you're throwing in that overall market volatility at the moment. So, look, obviously you guys have to do your homework on this one, given it has just debuted.
Yeah, thanks for that.
Yeah, and that's why I was running a bit late, because actually we've done a lot on it and I had to read what we've done.
Yeah, right. Okay, well, Mark, you go then.
Okay.
Start.
I wouldn't go near it. I think it is a highly strung, highly likely to go under. That's how bad it is.
Why is that?
It's a couple of reasons. One is that they're virtually on a similar size scale to the hyperscalers. So they're the only non-Amazon, Microsoft, and so on, class of the hyperscaler. But what they have is they've got about 250,000 Nvidia chips, mainly H100s and so on. So they've got the biggest availability of processing for AI in the market, outside the Amazons and so on, who are doing it for themselves basically. So that's all good. But the problem is they've got $8 billion in debt. They originally were trying to raise $4 billion in this listing, and they ended up with $1.5 billion. Last year they did 1.9 billion in total revenue, of which 60% of that was from Microsoft. Now Microsoft's already come out and said a few comments about reducing up to a gigawatt of processing power. They're pulling back from what was a very aggressive expansion, and yet CoreWeave totally relies on Microsoft as their main income. So that's a bit of a red flag. But the real problem is they lost 863 million last year on 1.9 billion of revenue, and they have a massive requirement to keep adding more chips. Now the problem with that is these servers now, for the latest Nvidia ones, can be up to 3.5 million per rack now. It was a million a little while ago, it's now 3.5 million. So they need a massive amount of cash, and they don't have it, and they've got 8 billion in debt already, and they only raised 1.5 billion. Their debt servicing could hit 2 billion within 12 months. So unless they can totally turn around the income side of the business, they not only will they'll be going back to the market for more capital shortly. They'll have to, this year, and at what valuation? I think it's and unfortunately, it could put a real like a bucket of cold water over the AI trade. Yeah. Because if they did get into big trouble, and to me, it's very hard to see how they won't. With how leveraged they are. And the other problem we've got is with all the inferencing costs going down, like collapsing. We've gone from like $4 a million down to 20 cents or something in a year. How do you make money when you've got all this massive capex that you've got on borrowed money, and it's depreciating very quickly? And I don't know how they're going to depreciate it, because we've never seen anything like this. The rate of Nvidia's expansion into power, processing power by cost or compute per dollar and so on, it's going down like massively. So then what you bought today in 6 months' time is woefully non-competitive in a price. So this is going to be a fraught area. Now Microsoft and the big players can they can cope with it because they can afford it, and a lot of it they're doing for their own benefit anyway. CoreWeave is a legitimate supplier of services to the market. So they're going to have it's going to have to be a brilliantly, all the stars are going to have to align, I think, for it to even survive. That's my view.
All right, so barge pole for you, Mark. I mean, it is backed by Nvidia. What are they seeing of it then?
Yeah, but I mean, look, I couldn't agree more. I mean, I'm just looking at the stats here, and I think it's a miracle that it manages to sit above, or that they got even 1.9 billion away, to be honest. Or 1.4 billion or whatever it was. I think they're heavily reliant. I mean, the gigawatt they want to take away, that's basically what these guys provide. So Microsoft could just cancel that contract. The debt is out of control, and the depreciation of these Look, I mean, throw Moore's law out of the window because Nvidia at the moment, the pace at which they're developing makes Moore's law look slow. Like it, that new, and we'll get to obviously Nvidia next, but those new, the new chip range. I mean, basically, it's what 10 times plus of now you can connect all these. So they're in a way. This would have been brilliant to be floated maybe a year ago. I think they're a year too late to market, and then obviously the announcement of the new technology from Nvidia really increases the depreciation on that, and not obsolescence, but you would want, these guys would be praying that something like the DeepSeek model, where they'll get a secondary market of chips for the lower cost models, where you have a lot of uptake from smaller size businesses. That's really the only way I see this working but they're going to take a massive hit on that straight up. Like they're paid top dollar to get involved, and I would imagine even if there's demand, they're going to be.
Yeah, and I think just on the backing by Nvidia, we need to be careful with that, because Nvidia actually what they did is they did a financing deal where they provided them a lot of chips and gave them priority access to it, which is why they've got so many Nvidia processors.
Yeah.
And then I think Nvidia had. Do you know what it was? It was 20% or less? It might be less.
They did. I mean, they got 250,000 of them.
Yeah, but I mean, how much Nvidia gave them in credit? So what they did is they gave them in credit, and they got shares for that. So I wouldn't say backed, because backed sort of infers we got you back, and we'll
220 million. They took 100 million investment, and 220 million was.
Yes, so it's not much.
Yeah.
So I wouldn't call that backed. I think Nvidia did it as a way of putting more contract compute out there, and it probably seemed like a good idea at the time. But I don't think they're backed by Nvidia in Nvidia's thinking.
Yeah,
because that infers something stronger than it probably is.
That's it's a quarter of what the daily move is in Nvidia's market cap. They don't really care about 100 million. I wouldn't have thought. I think the idea was right, because I think this cloud service does bring it a little bit to the masses, a touch more. Whereas, but. Whether the market's ready. There's 500,000 open jobs in the US at the moment for prompt engineers, AI engineers, etc. They can't fill them because the skill sets aren't out there. So if the big companies can't find these people, little companies aren't going to find these people. Yeah. So I think this is either a year too late or 2 years too early. They picked the worst possible time.
There's one other thing I've got to throw in. The founders of it, which are finance guys, so they're not they're hedge fund guys. They've taken out 500 million before they did this raise. So in other words, they've listed it and they've pocketed 500 million. Yeah. And they still have 18%, I think, of the shares, but they have not voting control.
They're ex-crypto guys, so they do have. I mean, realistically, Nvidia didn't embark on being an AI giant. No, the crypto guys.
Well, they were gaming really, and then crypto.
The crypto guys discovered the efficiencies, and the gamers did. So. Ben, credit to Jensen for parlaying that and doubling down and going down that road.
He's brilliant.
All right, well, we're going to get there in just a moment.
Okay. That's an interesting.
I think we get a tenor of what you're thinking about CoreWeave.
It really is. Yeah.
All right.
Hard no.
That's hard void then.
And it's actually a very good short opportunity. If you're a shorter, I'm not a shorter, but this is one that you look at it and you say, that's how bad it is.
All right, that's the view on our stock of the day, CoreWeave.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.